Hi everyone. I know it's been a little while since I last recorded a video. Sorry, it's been really busy at work, but I wanted to make sure, given it's December, to record a quick video about a year-end 2024 tax checklist. So this is everything you should try to do to help optimize your taxes before January 1, 2025. So I'm going to get right into it. There's 5 things to keep in mind going into year end for what you should be sure to square away before you go off and celebrate the holidays with your family. First is your 401k employee contributions. As a reminder, in 2024, your maximum contribution is $23,000. And that has to be completed by December 31st, 2024. So if you haven't done contributions up to this point in the year, you may want to do a large contribution for your final paycheck or two for the rest of the year. Again, you can do this before tax or after tax. If you do it pre-tax or before tax, that means ultimately you'll pay taxes on your contributions when you either convert or withdraw from your 401k in retirement. But the general idea is if you're doing a pre-tax contribution, you think your future income tax bracket will be lower than your current contribution tax bracket. So 401k contributions, the employee portion must be done by year end. The second thing that you need to do before year end, if you want to do it, are pre-tax 401k or IRA conversions into Roth. As a reminder, when you convert pre-tax dollars in your retirement accounts to after-tax dollars, you have to pay taxes on the conversion. However, you might want to do this before you're forced to withdraw from your pre-tax accounts. Once you reach the age of 73, for example, and you have required minimum distributions, if that amount ends up pushing you to a higher tax bracket, you probably actually want to convert from pre-tax to Roth during the years in between when you retire and when you're forced to take required minimum distributions. Those might be lower tax bracket years, in which case you can start doing some of those conversions from pre-tax to Roth, and that way you try to stay in a lower tax bracket for a longer period of time, even after your required minimum distributions kick in. Along with this, if you're already age 73 or older, that might mean you already must take RMDs or required minimum distributions. If you should already be taking required minimum distributions, you must also yourself do that before year end. Otherwise, you could owe penalties. So for Roth conversions, for converting from pre-tax to post-tax, or for required minimum distributions, you must do those before January 1, 2025. That's number 2. Number 3 is tax loss harvesting. So during the course of a year, you might have taxable losses from your investment accounts. For example, if you sell a stock at a loss, you can take up to $3,000 of losses and use that to actually offset income or offset investment gains. For those reasons, you might want to look at your taxable brokerage accounts and see if you're able to offset any of your gains from either income or from capital gains by selling stocks that have lost money. And I'll actually show you, for example, how you can do that with Infidelity. So Infidelity, you can go to Accounts and Trade, then down here, there's Tax Forms and Information. Click on that. Then on this screen, you want to click View Your Year-to-Date Tax Activity. Then it will take you to this screen where you can see, for example, in one of my taxable accounts, again, only taxable accounts matter here. You don't have to worry about harvesting losses from your tax deferred or tax exempt accounts like your 401k and Roth, selling losses in those accounts doesn't actually offset any of your income. But if you look at this taxable account, you can see here I have some income from dividends, I have some income from interest, and ideally I would have also losses. Well, kind of ideally. Ideally you have no losses, but if you happen to have losses, what you can do is sell those losses, and that will actually offset some of the dividends I'm getting from stocks, as well as some of the interest income I'm getting in this account. And not only will it offset some of this income, say for example, I actually have $26,000 in losses, I can offset all of this income, and then I could also offset an additional $3,000 potentially of my salary income, my W-2 income. So that's just one thing to keep in mind, which is you might want to do tax loss harvesting. Now, just remember when you're doing tax loss harvesting, there is something called the wash rule, which means if you sell a stock and collect the losses from it, or sell an ETF and collect the losses, you can't immediately go and buy the same stock again. If you buy it within a period of 30 days after you sell it, then that actually triggers something called the wash rule, which means it no longer counts as a loss. So that also counts, by the way, if you sell an S&P 500 ETF like VOO and buy a different one like IVV, which is also tracking the S&P 500, that still will trigger the wash rule because they're substantially the same type of investment. So that's just one thing to keep in mind, which is you need that 30-day gap. Now, what you could do, potentially, not saying these are the same, but you could sell one company and buy a similar company in the same industry, and that's okay. So if you sell one semiconductor company, for example, and buy a separate one, because they're different companies, that's not going to trigger the wash rule. The fourth thing that you want to do before the end of the year 2024 is if you want to, one, gift to charity, you can do that as a tax deduction for 2024 if you do it before January 2025, or two, if you want to do gifts to your children, for example. Per year, you can gift $18,000 per parent per child in 2024. So for two parents, you can gift one child $36,000 without having to report it to the IRS. Above that amount, you have to actually report that gift to the IRS, and it counts against your lifetime gift exemption. So this includes gifts, for example, if you're helping a child pay for a down payment and it's more than $36,000, you actually have to report it to the IRS. So sometimes it's better if you're trying to do some type of gift, such as helping pay for a down payment, to spread it over time as opposed to do it all within 1 year. So that's the fourth thing. If you want to do gifts to charity or gifts to your children, you need to do that before January 1st, 2025. The fifth and final thing to keep in mind, if you want to do it before 2024 ends, is 529 contributions. Now, states have different rules around this, but some states require you to meet a year-end contribution deadline to qualify for state tax benefits. So that's just one thing to keep in mind. You should check for your own state, but if there's potentially a year-end deadline, then you actually have to make that contribution by December 31st, 2024. So these are the 5 things to keep in mind as you're getting to year end, something you might want to do in the next week or two before you sign off and enjoy your holidays. Now, quickly, I wanted to talk about 2 things that you still have time to do in 2025. These are things that as long as you do it before you file taxes, So before April 15th, these are two things where you still have some time and don't have to do it before January 1st of 2025. These two things are, one, you can still do a backdoor Roth up until April 15th of this upcoming year. You can still do HSA contributions as well. So these are things you have time to do in 2025 for the tax year 2024. So hopefully that was a helpful overview of the year-end tax checklist I recommend everyone look through and make sure they tick off before the holidays of 2024. I wanted to make a quick video about this, and my hope is going into next year, Zhang and I will have more time to make more videos about what we think of the market and interesting investments that we've been involved in. But in the meantime, we wanted to make sure everyone had this checklist going into the year end so you can tick it off before the holidays, and hopefully everyone has a lovely Christmas and New Year's. And maybe if I don't post a video before, I will see everyone in 2025. Happy holidays, everyone. Thanks for listening in. I'm Nick, and I've worked in finance for almost a decade. If you enjoyed this video, please give it a like and follow our channel for future videos. You can check out our WeChat group for more wealth and retirement tips. Talk to you next time. Bye.